Audits and the issuance of independent opinions. The Companies Act. So that is one aspect of the regulatory framework. Regulatory framework, first of all, I've said, comprises of laws and standards, and one such law is the Companies Act. The Companies Act outlines the requirements for financial reporting and auditing. The second one is the Public Audit Act. The Public Audit Act governs the auditing of public entities in Kenya. All right? Public audits in Kenya. It governs the auditing of public entities in Kenya. The Act establishes the Office of the Auditor General and sets out the framework for conducting audits of public funds and assets. And the audit firms engaged in public sector audits must adhere to the specific requirements, standards outlined in the Public Audit Act. The third element of regulatory framework of auditing of companies in Kenya is the Institute of Certified Public Accountants of Kenya Act. ISPAC Act is the professional body for accountants in Kenya, and this act establishes the institute and also outlines the functions, including the function of setting professional standards and regulating the conduct of the members of ISPAC. Standards. The Act establishes the institute. So ISPAC issues the Code of Ethics for Professional Accountants, which provides guidance on ethical behavior for auditors. Number 4, we have International Standards on Auditing. International Standards on Auditing. These are ISAs. These are standards that are issued by the International Auditing and Assurance Standards Board. International Standards on Auditing and Assurance Board. International Standards on Assurance and Auditing Standards Board. International Standards on Auditing are issued by the International Auditing and Assurance Standards Board. Standards Board. Understand? The IASBA, the International Auditing and Assurance Standards Board, issues international standards on auditing. Right? And these standards provide guidance on conduct of audits. So ISAs are generally accepted. They are adopted in Kenya and many other countries, and auditors are expected to comply with the international standards on auditing. So candidates, we are discussing the legal and professional framework for external audits. And we are beginning with the regulatory framework. Is that clear? Janice? We've said that in Kenya, the regulatory framework for external audits primarily comprises of laws and standards. Regulatory bodies include: 1, the Office of the Auditor General. The Office of the Auditor General. This office is responsible for auditing the accounts of national and county governments, the state corporations, and other public entities. Number 2, ISPAC, the Institute of Certified Public Accountants of Kenya, regulates the accounting profession in Kenya, including setting professional standards, conducting disciplinary proceedings against members, and so on. Then the third regulatory body is the Public Sector Accounting Standards Board. Public Sector Accounting Standards Board. Public Sector Accounting Standards Board is responsible for developing and issuing accounting standards for the public sector in Kenya. So these are some of the few bodies in Kenya. We also have international bodies like the one we mentioned here, the International Assurance Auditing and Assurance Standards Board. Now let's move on to the first subtopic, which is appointment of auditors. We all know, candidates, that auditors for public companies, auditors for public companies are appointed by the shareholders. They are appointed by the shareholders. And the audit of public operations must be done by external auditors. So the appointment of auditors in Kenya, we know, is a critical process that is guided by legal and professional framework to ensure the independence and competence of the auditors. There are laws that have been put in place to ensure that auditors who are appointed are not only competent, but also independent. There has to be laws that guide the appointment of auditors. You understand? The professional frameworks, there are, let me put it this way, there are key regulations and procedures that govern the appointment of auditors, and one of them is the Companies Act. The Companies Act empowers the shareholders to appoint an auditor at the annual general meeting. So auditors, firstly, are appointed by shareholders in the AGM. Auditors are appointed by the shareholders in the AGM. And in case where the existing auditor is disqualified or resigns or is removed, the Act allows the appointment of the independent auditor by the company's directors. In case an auditor resigns between accounting periods, because annual general meetings are held once in the accounting period, but an auditor may resign before an AGM is held. In that case, the Act allows the directors to appoint, board of directors may also appoint the external auditor in the event the auditor resigns or is disqualified. The auditor may resign, may be disqualified, or may be removed. In such instance, the law allows the directors to appoint a new auditor who is then approved in the annual general meeting, so that there is no vacuum at any point in time. So an auditor may be appointed by the shareholders or by the board of directors. Where it's appointed by the board of directors, then that has to be ratified in an annual general meeting. You understand? The Act also sets out the appointment of an independent auditor by the company's directors. And there is what we call eligibility criteria for individuals or firms to be appointed as auditors. So those who are appointed must be qualified and registered with the Institute of Certified Public Accountants in Kenya. You understand? There is what we call eligibility criteria. So candidates were discussing the appointment of auditors, and we've said that auditors are appointed by the shareholders. But we all know the office of the Auditor General, this is an office that is established by the Constitution. This is a constitutional office. And we stated that the office of the Auditor General is responsible for the audit of the county and national government accounts and public entities. But we have the Public Audit Act, which also spells out many other aspects of the audit of public entities.